talk about critical price points first. Let's jump in the charts. This is the weekly chart. As you can see today, this weekly candle is important. Today, the most important price points is the 25% range of that, the consequent encouragement of that. This is not so much important today, just for the underlying narrative that we are bullish. This now is the daily chart. The prices that have been annotated from the weekly chart are now on the daily chart, with an extra of the relative equal highs as the buy side liquidity for the weekly target. I mentioned that we want to focus on the consequent encouragement of the wick, 25% of that wick, and later on I will talk about this point and the opening price of this week's candle, which is a very close correlation to the 25% range of that. This low of the day is almost, I think it's the same as the consequent encouragement of previous week, not previous week, the week that we annotated, which also is the same thing. The consequent encouragement of that wick is the same thing as the daily fair value gap of September the 3rd. The midpoint of that is also important. This is not so important. It's just for completeness sake. You can see it's the daily bearish order block. This opening price, like I mentioned in the previous slide. Today also very important is this fair value gap, the 4-hour fair value gap. Once again, we take a look at this wick. If we put this wick, take the midpoint of that, draw that out in time, we can see exactly the consequent encouragement of that wick as the price is stopping there. Then this candle's high and this candle's low. There is a gap in between, but that shows better on the 4-hour chart. So let's zoom into the 4-hour chart. Once again, that's the wick. That's the wick that I just mentioned, and that's the wick that has been traded today. We leave a part open, which we like to see for some bullish momentum. Also, this is the low of that day. If we draw it into time, exactly the midpoint of that, that's where price stopped. So when we divide this fair value gap into sections, the upper part, the 25% range of that, today that's our point of resistance because of all the points that I just mentioned. Then the daily fair value gap of September the 3rd, the high of that, that's our point of first resistance, and we could have possibly traded up to this, which we didn't do. Then once again we have the 25% of the weekly wick, which the bodies are respecting in the 50-minute chart. This will become very clear. The low of that, which is not so important, but for completeness sake. So let's jump into the 50-minute chart. Now take a guess where the 25% wick is, what I mentioned. That's here, right here. But first, the fair value gap. We can see inside that fair value gap, the 25% range of that, that's where the price exactly stopped. This is an order block, the 50-minute order block, and if we have put the chart in an hourly chart, then there was a fair value gap that left a portion open which didn't completely fill. Once again, this is our point of resistance, which is our first target for the day. By taking out these relative equal highs. There you go. There's the 25% of the weekly wick. Bodies are respecting that. Let's clean up the chart a little bit and we'll see where our entry is. This right here is our entry, and this is what it looks like. And I will explain that very clearly. Keep in mind that we have just explained the critical price points for that. This is there you go, the sell side. When we go back to the 50-minute chart, we have the order block. This is our entry. Remember this price point in here, which is our entry, which is the first thing that we wanted to see, going with the Judas swing and after that we wanted to see a price rally up to take out these equal highs. This is first target, and then maybe the buy side in the upper portion as our weekly bias. So once again, that's the sell side liquidity that we have mentioned on the 50-minute chart. When price opened, we immediately went into that. Then we went back up, we meandered around at 10 a.m. Before 10 a.m., we went to that order block, then we rallied up. As you can see, we leave some gaps. And that's where my trade is based upon. You see, we zoom in into this part right here. So this is the opening bell. Opening bell, we take out the minor sell side liquidity and the major sell side liquidity. We run up to take out the buy side. We meander around a little bit. We wait for 10 a.m. We see that price is coming back to the 15-minute order block and the 25% range of the 4-hour fair value gap. So this is the first fair value gap that is formed. We see it's tested again. When it comes in here, it comes back in here. We see that we don't want to get short because we don't respect the upper portion of the first fair value gap after 9:30. We don't respect that, which is an indication of strength. And here we see that we are somewhat respecting that, respecting this. But what's more important, that we don't trade up to the midpoint of this fair value gap. So our entry then becomes the inverse of fair value gap in here, where we take the long position after 10 a.m. We take the long position to trade up to the buy side liquidity, the daily fair value gap high. Please leave a like and subscribe. Ask me questions. I like that. I learn a lot from that. And if you are a experienced trader, please tell me if I've missed something.